GIFT Nifty indicating to a flat start. We aren't expecting fireworks. Remember, it's the first trading day of a brand new series. The indication comes in that we should be seeing levels of 21,700 over the next couple of days. But volumes, remember, will remain thin in today's day of trade. A quick check of what's happening globally as well. Like I said, the cues coming in from the rest of the world are fairly subdued. Asian markets are trading flat. No excitement or euphoria there. I think traders are literally counting hours to closing bell for Asian markets as well as we go into the New Year's Eve weekend later today. So Asia remains unchanged. Japan has been one of the best performing markets in the world with a gain of 28%. So that market also trading in flat territory this morning. Well, nothing major to write home about from Wall Street and overnight trade. Dow, S&P and Nasdaq remain largely unchanged. Oil did retreat for the fourth straight day. In the last 5 sessions, it's seen mixed data cues coming in on inventory. That, of course, is keeping the plug on crude prices. Apart from that, if anybody had any doubts in their mind about a Fed rate cut, which is expected to be around the corner, we talked about how 73% of the market anticipates the Fed to cut rates as early as March. Another data point that we get in this morning is jobless claims have risen more than expected, which means more people are filing for unemployment claims. That number, higher than expected, could again reiterate that the Fed would be looking at a rate cut sooner than later. That's what we have globally. I think I've pretty much covered all of it because it's fairly limited. Volumes, remember, like I said, have been light on Wall Street and in Asia this morning. I don't expect it to be any different, Niraj, in India either. I'm hoping that the bulls now take a break and the bears can also stop worrying about this and go home as well. But it's been a stellar series yesterday as well. Very smoothly, the markets closed comfortably at levels that were out of reach. At least that's what we anticipated at the start of the week. Bank Nifty gave its support in more ways than one. All in all, we're looking good as we get into a brand new season. Lots of triggers and cues also lined up with earnings around the corner. Yeah,
Samina will be talking about some of this as well, the Q1 things to watch. But just the trade setup for the day today, we've seen a continued uptrend for the last 5 days. And which has been very strong, with strong volumes as well, I must add. The interesting bit is that because the expiry got over yesterday, volatility came off. VIX came off yesterday. PCR came off a bit in trade yesterday as well. Those are two things that were niggling worries, if you will, around the kind of bullish setup that we have. I think those two came off, which is actually a good sign. To my mind, we're still not in the extreme greed quadrant, but higher VIX and a higher PCR was symptomatic of a corrective move. And I think both of those having come off because of the expiry done is actually a good piece of news. Remember, for 4 days on a trot now, we've had a higher high and a higher low formation. In fact, with a gap up start over the last 2 days, which from technical parameters apparently looks solid. Maximum call OI, which is something that I focus on, which is the options data, and the maximum call OI is at 21,800 strike. Now remember, a very strong addition of over 47 lakh contracts at that strike. Now imagine if this were to be taken out convincingly, then the kind of unwinding that happens at that strike and therefore the resultant impact. So many people are talking about markets making a dash towards 22,000 in the initial part of this new series. So let's wait and watch. But something that we were talking about yesterday, the last 3 months have seen a 14% up move. Typically, January in 7 or 8 of the past 11 series has not been a great series. So does the market have some headwinds to contend with? Uncertainty around earnings, though earnings are expected to be positive, but a great December, and more importantly, not just December, the last 3 months, about a 14% up move. At some point of time, this will give way. Could January be the series or be the month when this happens? Because seasonally, it's not been as great a month. But I must say, the FI onslaught continues. Of course, there are a lot of bulk deals to account for, but 4,358 crores from FI buying in trade yesterday. The day before yesterday too was a large number. So yes, this is a lot of it is bulk deals. But Samina, as much as we talk about how FIs are taking a holiday, the last 2 days have certainly proven that no, it's not a holiday.
Everyone's working overtime. I think when the money is there on the table, you want to take it as quickly as you can. So not letting go of any opportunities. I think that's very, very clear when it comes to our markets. Niraj, while you said that, and we've talked about this, how 7 out of 10 times January has usually been a very, it's been a weak market, right? And in this context, because we're coming out of a very strong year end, but also because we've got a strong year end, could usually and historically has been an indicator that the year that comes by, post that, so the preceding year is usually very strong for markets. And we've seen that with global markets. I don't know how much of the data relates to India, but at least in the Dow and the Nasdaq, if you've had a year where the last few days of the month of the year have been good, the following year sees gains of 13 to 14% on. And if you've just got to pile that up to 25% returns this year, I don't even know how most portfolios will be looking right now.
Yeah, quite stunning. I didn't know that data, but great data, and that ties in with something that both Rhythm Desai or Bofa Amish was saying, right? That they expect a 14-15% uptick in the Nifty in the calendar. So interesting times ahead.
And I guess that would hopefully be coming into the large cap space. There is froth in the broader markets, and every brokerage, every investor has explicitly stated that the small and the mid cap space looks very frothy at this stage. But who's to tell? The game has been about momentum, value, of course. Finding value in this market has been a bit of a challenge. That's, of course, the consensus that we have. But let's take you through a few stocks that you want to watch out for in today's day. Niraj, actually, before I go into that, I did think that globally volumes have been quiet, but locally that's an aberration again?
Yes, it is an aberration again.
So I guess, the decoupling. We used to call this decoupling maybe decades ago, but so India continues to see very hot inflows, while globally things are quieting down as we go into the new year, rather end of the year. A quick take on a few counters we'll track in trade this morning. You've got PNB Bank. The stock was one of the top gainers in trade yesterday, went home with gains of nearly 4%. We've heard that the board has approved raising 7,500 crores in the next financial year. This, of course, will be either through a QIP or an FPO. That's one that we've got to mention. They've also raised, remember, 1,153 crores via bonds on a private placement at a coupon rate at 8.55%. So that's Punjab National Bank that you want to watch out for. Could be used for sprucing up the balance sheet and, of course, expansion plans. The stock went home with gains, like I said, was one of the top performing PSU stocks in yesterday's trade. Well, apart from that, Swan Energy, this is another fundraising approval that's come in. They've approved raising 4,000 crores through various instruments. The stock was higher marginally in trade yesterday with a gain of 2%. Hypnos Fund, I believe, has also sold about 1.2% stake at about 500 rupees a piece, 500 rupees 0.58 a piece on the 30th of September. So they, of course, held that stake at 1.25% on 30th of September, now made that exit. Apart from that, Azad Engineering, which listed on the exchanges yesterday, the gains were fantastic. From the word get-go, the stock opened with a gap up, gave up some of those gains by the time we closed trade, but still went home with gains of 29%. In a quick update, the quantum may not be large, but definitely worth a mention. Abu Dhabi Investment Authority has picked up 3.98 lakh equity shares from the open market, and the average price of that was 722 rupees a share for a total consideration of 28.65 crores. This more than likely could have happened in the first few hours of trade, because that's when Azad Engineering traded in that band of 700 rupees plus. Apart from that, Zee Entertainment, worth mentioning because there's been so much going around the Zee-Sony merger. Plutus Wealth Management has picked up 0.63% stake via the open market in trade yesterday. This was picked up at about 270 rupees, which was what Zee Entertainment closed at in trade yesterday. Another recent listing that debuted on the exchanges literally last week has been India Shelter Finance. Remember, the stock didn't do exceptionally well in opening, but the earnings have been better better than what the street was expecting. Worth noting that the net interest income is up about 44%. Profit is up 67% to come in at 60 crores versus 36 crores that was seen in the same quarter last year. NPAs, gross NPAs stood at 1%, so again, very, very comfortable, and net NPAs at 0.72%. Remember, despite a very strong performance, we haven't seen too much interest on the counter. The stock is down 3% from its listing date. Maybe a good quarter, maybe a good sort of reporting in terms of earnings could give a little bit of a leg up to India Shelter Finance in today's day of trade. Couple of other updates. The RBI has approved ICICI Asset Management Company and ICICI Pru to pick up 9.95% stake in Federal Bank, IDFC First Bank and RBL. This is largely, an allowance of sorts or an approval of sorts. This has to be completed over the next 12 months, but in principle, a 9.95% stake buy from the EMCs has been approved by the Reserve Bank of India. We also have one listing, but I'll come to that in a minute. Lots of other counters. Niraj, we talked to Probal Sen yesterday on a fuel price cut, and he was perplexed at that stage, but it seems like that could be something on the cards.
Yeah, well, it'll be interesting to see what happens. So, from the remainder of stocks that Samina may not have looked at, though, I don't think there is much there, but yeah, BPHP, IOC maybe, state-run OMCs. Let's see if the price cut comes in and what happens there. But just the quantum of move that happened yesterday in the market seems to suggest that if there is a price cut, it may not be as bad as people may have feared, because otherwise, a day ahead of the price cut, you usually don't see stocks moving up on such high volumes with such velocity. It'll be lovely to talk to the fundamental guest on BPHP IOC as well. So that is to be watched out for. Don't know if ICICI Lombard General Insurance could be in focus, but they've received a demand from the GST authority, 1728 crores. The number is large. In case the stock corrects a bit, maybe this could be the reason. So that's to be watched out for. Thirdly, Indiabulls Housing Finance. Matthew Sirak, noted investor, has bought about 25 lakh shares. I think from what I hear is that, rather not what I hear, but what could be the case, because Indiabulls Housing Finance is going out of FNO, this could well be a swap that could be happening as well, because I think I've seen Matthew Sirak's name come in Indiabulls Housing now 3 or 4 times in the last 6 odd sessions. So do watch out for that as well, though. It's certainly a vote of confidence by somebody who chooses his bets very carefully. And a couple of stocks on delivery data, which could be very interesting. So Dushman Carbogen was up about 12% yesterday. Delivery versus the 1 month delivery volumes was up 12 times. So that is strong. I mean, we're comparing yesterday's delivery to the delivery volumes or stocks marked for delivery for the last 1 month. Dushman Carbogen up 12%, 12 times volumes. Sula Vineyards 4.7% higher, 7 times volumes. Suzlon up 3%, 7.2 times volumes. And we'll talk about Suzlon and the whole green energy bit in a bit on editor's cut as well. And Suprajit Engineering, which was up 8% on volumes marked for delivery, about 6.8 times the 1 month average. So that is interesting. Couple of brokerage notes include the Motilal Oswal call on GAIL. There is a news bit as well, which we'll cover later on the show. But the Motilal Oswal note is a buy. They say GAIL is their top pick for 2024. The target price is 195 versus a current price of 157. So do watch out for that as well. They say that the volume growth or volume CAGR seems pretty strong. They expect transmission EBITDA to account for 46% in FY26 versus 40% in FY23. Why this is important is this, because this improves the earning visibility. And lastly, they say that the startup of the new Usar plant will add up to 9% in standalone FY25 EBITDA. So that is the other piece that you should monitor when it comes to GAIL. So these are a few stocks to watch out for. There is, of course, some that I would have missed, but just want to mark one or two. There is, if indeed the Glenlife deal gets closed, then Glenmark Pharma becomes a stock in focus for the new series. So that is to be watched out for. If indeed some fundraise happens in Adani Enterprises at any group level or a group company level, then that could be interesting to watch out for. And watch out for BHEL from amongst all the PSUs. Yesterday, while there is a Hind Copper and a PNB and a clutch of others that moved up, BHEL, there is a buzz of a large order win for the last few days. Yesterday was the first day wherein BHEL showed a breakout move. I think technically it becomes a very important stock from the PSU basket to watch out for. So that's the third one from a Jan series perspective that people should be watching out for. And a new listing as well, Samina.
And Innova CapTap should be one that you want to watch out for. Whether or not this one gets a double digit is going to be anybody's guess. But Niraj, have you tracked this one? It's a 570 crore public issue and was subscribed again quite heavily, 55
times. So just that does it. You don't need to
so
study
if you
the
don't subscribe over 50 times, you don't qualify pretty much.
Something like that. That's a club. There's a club there. But yeah, so that's the long and short of the stocks that we want to mention on the trade setup as well. And keep an eye. Some of these will be covered in detail on our show. But it's time for the editor's cut. And we talk about two interesting topics. One cautionary and one maybe not so. Actually, both of them cautionary, right, Alex?
So you have to tell me, and of course Vishy is joining in as well, the banking editor. But let me give you a sense of what this is all about if you're tuning in for the first time. Editor's Cut. We take a couple of big stories or three big stories and we try and delve into them and give you the perspective that is in the newsroom so that you can approach the day of trade with a lot more confidence and hopefully usable insight or actionable insight. The conversation today is about two aspects. One has to do with the latest financial stability report from the Reserve Bank of India, where you're getting a bit of an inkling as to what was running through the regulators' minds when it came in very assertively to stop or to reduce unsecured lending or to put curbs on unsecured lending. Vishy is going to tell you all about that. And we're also going to talk about the renewable energy space and what is buzzing. Of course, we know that that's a theme that has been playing out. But what is the outlook for the next financial year based on some of the information that Niraj has picked up and compiled? So let's start with the FSR, which is a significant statement by the Reserve Bank of India to make.
Yeah. So Alex, the FSR is a 6-monthly, half-yearly statement that the RBI puts out on the strength of the banking system and what the future looks like, right? In that, they also look at what has happened in the past and sort of explain why. But this is probably the first time that since November 16th, when the RBI came out against unsecured loans with a rule to increase the risk weights on those loans, it's the first time since then that the RBI has given a clear indication of what is it that was worrying them. Previously, the RBI governor said we are not waiting till the house catches on fire and all that. But now we understand what exactly, who's lighting the match, so to say. So a few points that the FSR points out specifically as potential risks, and that's the first one is with regard to the risk profile of personal loans as well as consumption loans, the loans themselves. Right. So what the situation looks like is that there have been more downgrades on those loans than there have been upgrades in terms of the risk potential of that particular loan. That indicates that there is some level of stress that is building up.
So before you step forward, so that everybody understands, when you're saying downgrades of the loans, it means that there is delay in payment and therefore the bank is categorized?
Not necessarily delay in payment, but the situation around the loan is looking like, for example, the income has not increased too much, the person's borrowed maybe too many loans. All of that will come a little later. We'll try and understand where all of those fears are coming from. The second thing that the RBI has noted is the high vintage of these loans. Now, what is high vintage? Typically, the vintage refers to any loan which has turned into NPA 12 months after it has been borrowed, right? So that for personal loans stands at 8.2%. 8.2% of the personal loans that have been borrowed in the banking system are turning NPA within the first 12 months, which is a very high number, and that's something that obviously is concerning the RBI. It's a big red flag, yes. The other point that the RBI is also talking about is with regard to the over leveraging, which I said, it's not necessarily just default, it's also the situation with the borrowers. So according to the RBI's assessment, and they're looking at credit bureau data, they're looking at bank information, 43% odd of the borrowers who have taken a consumption loan. A consumption loan is basically you take a loan to buy a car or an air conditioner or a fridge, right? You take these loans. So anybody who's taken a consumption loan, 43% nearly of those customers already have 3 live loan accounts. So this is their fourth loan by the time they take it. And not to forget that more than 30% of people who take these consumption loans have taken loans, at least 3 loans in the last 6 months.
Okay.
So it's not just the current point in time, it's also very recent history that people are just bulking up on loans. And then there's the last point that they made was that 7.5% roughly of people of borrowers who take loans under 50,000, they have at least one default on their portfolio.
So wow, okay. So that's very significant.
That's a very significant point of stress. Now, obviously, in terms of absolute numbers, these don't add up because these are very, very small figures, right? In terms of the banking system loans above 150 lakh crore. So this is going to be a very small percentage of that. The problem is more on the direction in which it is headed, right? So if you're a retail borrower who's so far been the bedrock of retail growth in India, right? Over the last 10 years, housing, vehicle loans, they've all pushed up retail loan growth. In the last 2 to 3 years, unsecured lending has really boosted retail loan growth. So if those borrowers are facing some amount of stress, over leveraging or default, that's a serious cause of concern. And that's why the RBI is saying that maybe there's a need to rebalance the risk weights on these loans and make sure that banks are not over leveraging or over extending the loans to these borrowers. There is some limitation on that.
I have a question here. And actually, by the way, a comment that I don't remember who, but one of the MNC brokerages, somebody was making this point that a lot of people who are taking 75% of their home loan, around 70% of the total value as home loan, are taking another 25% via personal loans for home improvement as well.
Right,
so even there, the personal loans might be going.
So I spoke to somebody at the RBI, and the point that they were making is that as long as it was within housing, they're actually not that bothered.
But here's my question, Vishy. If you're taking a loan for home improvement, so on, that's not money going in a small ticket consumption item like a phone, but a larger thing, and therefore...
so basically in the house there is no borrower equity. They're not putting up any money of their own.
Right. Yeah. And therefore, one more question from my end, therefore. That was just a point that I heard somebody, so I thought I'll bring it up.
Sure.
But the question that I have is there a risk of increased NPAs in certain lenders, and people have to, of course, do their research, in certain lenders who might, whose lending practices may not be completely strong, and who are borrowing at the lower end, because I saw that statistic that you mentioned, that under 50,000 there is at least one default.
Yeah, that's right. So definitely there are lenders who have a weaker underwriting standard. Those are words that the RBI has used in the FSR, saying that this is indicating weaker underwriting standards. The high vintage, as I told you, 8.5 roughly percent of personal loans, seeing some amount of stress, over leveraging. That's pointing to weak underwriting standards. But obviously, this is not an industry-wide phenomenon. It's in certain pockets. Which are those pockets? Who are responsible for that? We'll figure out.
But then, to go to your original point, clearly a match had been lit, which is why the RBI stepped in to extinguish it.
Absolutely, that's what's happening.
But one last point before we move on to the next subject, which is the stress test that the RBI conducts. My initial reaction to that was positive, I must admit, because we've seen days when the banking system non-performing assets had ballooned and reached unprecedented levels. And we're talking about 3.2% as of September of this year, and a worst case severe stress scenario would push it to 4.4% in September next year. Isn't that a positive thing?
Let's look at how the RBI conducts these stress tests. There are 3 buckets in which they put it. Baseline scenario, which is the current economic conditions continue for the next 1 year. A medium stress scenario where the current economic conditions deviate by a point of 1, and a stressed scenario which is 1.25. Now the current conditions are so congenial, things are looking really good. In a baseline scenario, 3.2%, which is 3.2% gross NPA that is there currently, will be about 3.1% in September next year. So things are pretty much flat on the gross NPA front. Now, even if from the current congenial conditions things deviate slightly, it's not really that bad a situation. So part of it is, of course we knew about it. The other part is the RBI sort of reaffirming that view that in the future things don't look that terrible.
All right. So that was, anyway. So I'm not completely off in my expectations. The situation is congenial right now. All right. Niraj, the second point, which has to do with a couple of these renewable energy players or players in the space that have seen their valuations go very substantially higher in 2023 for good reason. The question that you're asking is FY25, the outlook, justifying that valuation?
Yeah, so, and the jump that is anticipated, and, wind power is one, solar is one.
Yes.
We've seen Adani Green do that PPA as well, right? So here's the piece. And the thing is, are the valuations prohibitive? That's the question that we are asking, right? So wind and solar, the big picture, there's a 50 gigawatt annual renewable energy bid process, which will be for the period of FY24 to 28. That's large, okay? I mean, current wind is hardly, Suzlon and Inox put together have an order book of 3 gigs. That's about it. So if you're talking of 50 gigs or 50 gigawatts for the next 5 years, that's 10 gigawatt an annum. You can imagine the difference in size, right? Now, there is a declaration of the trajectory of wind RPO up to 2030 by the Government of India. First offshore wind tender expected to be floated soon. And NTPC's one tender is out there as well. And wind capacity or solar capacity is getting added at a good space, but the targets are very, very high. So therefore, the question you ask is, are markets pricing in growth from these companies for the foreseeable future already? Remember, Adani, when its annual report, as Sajid was saying, talks of targets of 45 gigawatts by 2030. When we spoke to Inox Wind day before yesterday or the day before that, they spoke about how they have executed 200 megawatts in the first half. They'll do 500 megawatts in the year at large. They will do 650 megawatts FY25. And they didn't shy away from saying that we might touch 1 gigawatt as well in FY26. So these are very stiff numbers that people are talking about. The NTPC wind solar power tender, which got declared on December 27th, saw some very strong bidding. So, and none of the listed players, completely unlisted players, but saw very strong bidding. The NTPC wind tender is open, could be very meaningful for Inox Wind and Suzlon. And we all know that Adani Green recently tied up for that 1799 megawatt of the SECI order as well. Right. And last piece, the guidance is looking very strong. I already mentioned some of the numbers there. Suzlon has guided for doubling of dispatches in the second half versus the first half. And there is a company called Sangvi Movers, which transports these turbines, right? You look at ancillaries as well. Sangvi Movers guided to 45% growth in H2 over H1. So nearly 1.5 times of what they did in H1 is what they will do in H2. And we know the Adani Green things, I don't get into that. But just the point that some of these businesses are guiding to some very, very, very strong business growth over the next 2-3 years.
What are the multiples looking like though, Niraj?
That's the only problem. And you can call it a problem if you look at FY24, Alex and Vishy, but maybe not at FY25. I'll make this very quick. Inox Wind trades at over 300 times FY24. But it comes down to 25 times FY25. And by the way, this is 25 times based on the earlier guidance. In the interview, he said that they might up the guidance for FY25 in the fourth quarter. Suzlon, and we haven't spoken to them recently, it trades at over 80 times FY24, 33 times FY25. So I think maybe the answer is, how well can some of these companies execute? And if they can, then the valuations become palatable. Otherwise, they look very, very stretched at the current numbers.
All right. So thanks, Niraj, and as well, Vishy, for breaking that down for our viewers. And of course, do let us know what you think about the two conversations that we had today. If you have thoughts, then write to us on any one of our social media platforms, or indeed on the WhatsApp number, which will flash on your screen at some point over the next couple of hours, I'm sure. We have to slip into a very quick break, but there's more on the other side that will help you prepare for the last day of trade in 2023. Do stay tuned. This is NDTV Profit.
Right, back with India Market Open right here on NDTV Profit. First, a look at the headlines at this hour. The Reserve Bank of India spells out why it stepped in to curtail unsecured lending, says it saw signs of borrowers shopping for loans. Crude prices slide further as shipping companies resume using the Red Sea route. Brent trades above the $77 per barrel mark. SEBI proposes new method to verify rumors in the market. Companies will now be mandated to verify rumors only if there are significant movements in their share prices. Indian markets are set to record their second best year of gains since 2018. Benchmarks are slated to notch an 8-year winning streak. And India is working on a new e-commerce exports policy to make it easier for exporters to realize forex. Well, from the macro to the micro, what is the FNO space saying about the markets on the first day of the new series, and what are the option strategies that you should keep in mind? Agam is here with those details. Agam, good morning. How did the last series end, and what is in store for the Jan series?
Right, so Niraj, the last series ended with a bang at life highs, and that of course is something that not a lot of traders were expecting. The question is, can we end the final trading day of the year as well on a new life high? That's something that I'm going to wait and watch out for. But based on the way the positioning has come through, at least morning gains is something on expected lines, because we have seen a substantial increase in OI as far as the Nifty is concerned, and we have seen another 0.5% advance out there. In fact, the Nifty now closer to the mark of 21,800 at the moment. Coming down the bank Nifty as well, a 0.5% up move for its underlying, and increase in open interest towards January futures. Naturally, there was a lot of rollover coming through as well, and because of that, we have seen a substantial up move towards longs. The question is, at what point in time can we start seeing some amount of profit taking? Well, at least at the moment, doesn't seem like there is any stopping. But let's talk about the options market. And when it comes to the Nifty, at least based on the open interest in options, we're looking at a 500-point range. This is, of course, over the maximum open interest in puts, where it is at the 21,500 strike, and the 22,000 call strike has the one with the maximum open interest. So this is a rough, pardon me, 500-point range that we are working with. Even yesterday, considering the Nifty continued its up move, we continue to see a little more writing. So that should come up for you in terms of change in OI. A little more writing in terms of your puts. So a lot more writing in the 21,800 and 900 puts. Let's talk about stocks then. And well, naturally, there was a lot of activity around there. So we did have Balrampur Chini, Hindustan Copper, and Samadhan, all them very volatile counters, seeing a considerable advance and a lot of increase and build up towards open interest as well. Delta Corp, on the other hand, which will, well, of course, we had a circular which suggested that it will move out of the FNO segment after a couple of series, and Vodafone also saw about a short building in. But it was a mixed market, more towards gains. And the question really is, where do we go from here, and can we expect consolidation, if not profit booking? Let's see what market participants are making of it. We have a market expert with us at the moment. That's Aditya Arora of Analytics Research. Aditya, good morning, and thanks so much for joining in. Let's start off with your view on the benchmarks, Aditya. What is your reading here, and how would you play them?
Very fine morning, gentlemen. I think markets have come to a point of exhaustion and resistance. If you look at FNO data yesterday, then FIs closed their almost 2 to 3 lakh contracts in call option and also in put option. So I believe they don't expect market to move up so fiercely now, although they have long exposure in future contract. So I believe now markets will move up if they move up with less momentum, with less fierce move. So probably we can see some consolidation over here or some profit booking, and 22,000 mark could be a stiff resistance for the market. So I'm expecting market to see little profit booking around this mark, 22,000.
Okay, expecting a little bit of profit to be taking around 22,000, Aditya, but you have two calls. Let me start off with your view on Tata Steel. Can you take us through your strategy here?
Absolutely. I think steel counters have been on a great run. If you look at mid-cap space, then Hind Copper was almost up 15% yesterday. And so is the trend in large caps like Tata Steel, wherein we have seen strong bounce back from that one-day fall which we saw on 28th December. So Tata Steel looks strong at 138. If I have to talk about levels, then this could be bought at 138.15, and stop loss should be 131, and target would be 145 to 160. So trend looks strong, and Tata Steel could make new highs in the new year.
All right, and Aditya, you also have another idea in REC.
Yeah, I think I had recommended short on REC last time. It has fallen to a great extent. Probably we had a short view on the stock when the stock made high. I think Jan there could be some positive spillover of December expiry, but going forward I see REC also correcting a bit from these points.
Aditya, my question here is that while you are suggesting either buying a call or buying a put, why are you not perhaps deploying something like a debit spread or a credit spread in this case? Considering, is the expectation here that the moves are a lot sharper, or what is the thought process here?
I think over here, I believe there could be some consolidation. So call writing could be a good strategy. I had recommended position on Tata Steel and REC last time. From there, there has been significant reduction in price in REC, and Tata Steel has gone up a little bit. I think there's space for more 2 to 5% from here. So buying an option could also be a good strategy, and option selling strategies could also be a good idea over here.
All right, but you wouldn't want to get into spreads as such, because of course when you're buying or selling, you're just taking one position. You do not want to get into spreads, considering these are relatively short times in terms of span.
No, spreads could be created. I was just talking about directional view. If we have to create the spreads, we can create the spreads right now. I have to devise a strategy looking at the risk reward. But yes, spreads could be done. And I think neutral is the stance, so spreads will also work.
Okay, Aditya, we leave it at that. Thank you so much for joining us and taking us through your views on the markets, also providing us with a handful of ideas there. Of course, we have two ideas, one on Tata Steel, the other one on REC. And with that, it's back to you, Samina.
Thank you, Gam. Yes, we're all watching out whether or not we kickstart a new series and close the year on a fresh new high again. A couple of stocks that Aditya has indicated for us, and Agam has highlighted the F&O activity as well. In the interim, it looks like it's going to be a quiet start. A flat opening is what we're expecting as we gear up for trade this morning. There will be a few stocks that we will be watching out for. Anushi is standing by with more on that. Anushi, I believe Punjab National Bank and Swan Energy have received approvals for raising funds. Share more details with us on that.
Right. So with Punjab National, the board has approved raising up to 7,500 crore during the FY24 to 25 period. Recently also the company was in focus after it raised about 1,153 crore via bonds on a private placement basis. Meanwhile, if we come to Swan Energy, the board had approved raising of up to 4,000 crore via multiple instruments. Even here, if we see, the company has been in focus with a lot of large trades that has been happening in it recently.
Right, so that is Swan that you have in focus. The counter will be in focus because PNB and Swan both looking to raise funds. Well, apart from that, I believe there's also a merger that's happening. So there's speculation and expectation of a retail fuel price cut that is doing the rounds. We have with us Vikas joining in with more details on that. Vikas, this is more or less an anticipated lines, or are we surprised with the fuel price cut on the cards? I know it's state elections are behind us, but what's the reason? What are we thinking?
Yeah, right. This speculation was doing round for quite some time now. But as of now, when we spoke to two ministries, Ministry of Petroleum and Natural Gas and Ministry of Finance, they have right now denied it as of now. But this expectation or speculation, we can say, was based on the profitability of these OMCs, oil marketing companies, who have combined together reported around 58,000 crore of profit in the first 6 months of FY24. So that was one of the reasons, and also it gave government enough headroom with elections around the corner to work on fuel price cuts that could have helped the consumers also, or the customers. And the other thing was that the crude oil price, it had come down from the highs of $120 that we saw last year, which also bled all the OMCs to almost, they had under recoveries of almost 15 rupees per liter of fuel. So that in this year could have helped the government to reduce the fuel prices, because now they have made the profit. If you look at the average of crude now, it's around $77 per barrel, which was almost $93 per barrel in 2022 last year. So with these kind of data and also the profitability of the OMCs, this is something that will be keenly watched out for in January.
Just a quick follow-up there. I know you mentioned this, but just trying to give a key takeaway. Is there a timeline that at least people in the know might be talking about? When would this happen, if this does happen?
Yeah, so basically with elections around the corner, people were expecting that somewhere around February this would happen for a better recall in the minds of the people. But there were a couple of reports that came in yesterday where people said that sources are saying that it may happen maybe by the end of this month. So that kind of gave in speculation, and then we checked with the ministry. So they have as of now denied it, that something is being worked out, but anything is possible in January or February.
Thanks for summing up so well. Much appreciate. So that's the view on, of course, the oil price cuts. Vikas giving us the details about that. Now, Anushi mentioned about one of the stocks. We've discussed the OMCs, but there are others which are also likely, newsmakers which might likely have reactions. And Anushi, what else? I think it's India Shelter Finance. There is also some Tata Group companies which is in focus.
Right. So two other stocks which are there is India Shelter Focus. This is a recently listed company which came out with its Q2 results, wherein it saw its interest income up about 43% to rupees 168 crore. Meanwhile, it reported about 67% jump in its net profit at rupees 60 crore. Now, the gross NPA and net NPA ratios stood at about 1% and 0.72% respectively. So we can expect some positive impact here with the stock being down about 3% since its listing date. Now, coming to Tata Consumers, so Tata Coffee and Tata Consumer Products is well in expected terms with the company's reorganization plans to unlock its synergies. So this merger is to be effective from 1st January with the allotment of shares being determined on 15th January. So with this, the plantation business of Tata Coffee will be merged in TCPL Beverages and Food. Meanwhile, the other business, that is the extraction business and the branded coffee business, will be merged with Tata Consumers. So post-merger, the Tata Coffee Limited would stand dissolved. Now, what does this mean for shareholders? So with this, TCPL will issue about 1 share for every 22 shares held in the Tata Coffee for its plantation business, while for the remaining business, Tata Consumers will issue about 14 shares for every 55 shares held in its Tata Coffee business. Post the arrangement, shareholders of Tata Coffee will receive new shares of TCPL for every 10 shares they hold currently for its Tata Coffee.
Thank you for that, Anushi. So lots of stocks that we'll be tracking. India Shelter Finance as well will be on top radar. Remember, the company listed a few weeks ago. The listing was with a bit of a gap down, but the earnings have been ahead of expectations. So you might see some buying coming into that count in today's day of trade. Well, to go across for a view technically and fundamentally on the market, Sunny Agarwal, head of fundamental equity research at SBI Cap Securities, and Aditya Arora, head of research and investment Comments at Invest Edu joins in. Morning, gentlemen. Thanks for joining us on the very last day of the year, last trading day of the year. Aditya, I'll come to you first. I think everyone was caught by surprise. Early this week, we didn't anticipate the markets making new life highs and closing the series on a new life high. How do you feel going into a brand new series? As euphoric, the optimism still remains. I know flows have been very healthy and FIs have been buying lock, stock and barrel as well.
Good morning, Samina. Thanks for the show. Clearly we're heading into the new year very strong. Bulls are completely in control of the last street at the moment. And then despite the fact that we're in a large decline on 22nd of December, markets completely shrugged that and look at the way we are charging ahead, almost on the doors of 22,000. So I'm not too bearish still on the headline indices. So both the Nifty, the Bank Nifty and the Sensex, I believe, are heading strong into the new year. And I believe next week onwards, we're going to continue seeing an upward trajectory in all the major indices, the Nifty and the Bank Nifty especially. Broader markets are somewhere I'm a little skeptical still. I would like to place my bets very stock selective in the broader market space, especially the mid cap and the small cap, because it looks slightly overstretched, the rally, Shamina. But Nifty definitely looks very strong and gaining strength to strength. The immediate targets that I'm eyeing on the Nifty is 21,900, about 21,950, just shy away of 22,000 mark. And I believe in the next week or so, we could approach those levels.
Yeah. Oh, it looks exciting. It looks exciting. I think bulls will be pleased to hear those levels, Aditya. Sunny, I'll come to you. What is going to be the next trigger for the markets? We're going into a new year with a very solid year behind us, if I may say. Earnings season round the corner, and I think that'll be the big trigger now for the markets. Would you agree? How would you be positioning yourself tactically on the markets?
Yeah, good morning and thanks for having me on the show. Yeah, it's a pretty strong year as far as calendar year 23 is concerned. And going forward, what I feel, as you rightly pointed out, the next trigger will be obviously the upcoming results season for December quarter. And followed by Street may start discounting the budget output, although the budget this year will be a vote on account budget, which will be released on the 1st of Feb. So coming to the results season, what I feel is that the consumer companies, auto companies, so we have seen the bunching up of festival season in the October to December quarter. So all the consumer company, whether it is on jewelry side, discretionary consumer company, auto side, all these companies are likely to report a fabulous set of number. In addition to that, cement sector is a sector which we feel can report a solid set of number. Banking is a sector which can report a solid set of number. And in addition to that, all the cap good companies may report a decent set of earnings. Having said that, obviously the result season will be kickstart with an IT companies. IT companies, we all know that December quarter is likely to be a weaker quarter as alluded by the management during the quarter two. But going forward with a disinflationary scenario or with the interest rate picking out, what is the outlook on demand environment? That is which the street will be tracking as far as large cap IT companies are concerned. Mid-size IT companies, especially the companies which are focusing on new age technology, whether it is a cloud migration, ER&D, whether it is AI, maybe those companies will continue to report a decent set of earnings. At the same time, I believe that their outlook will also continue to remain relatively better as compared to their large cap peers. So one need to be very stock specific going forward, need to focus on the sectors where bottoms up stories where earnings are likely to be solid over the period of next 4 to 8 quarters.
Mm-hmm. Okay. So, well, with that as a landmark, fundamentally, we'll ask Sunny some of the questions on some newsmakers as well today. But it's we should get in the ideas from Aditya before the pre-open session begins. So, Aditya, what are the trading ideas for the day today?
Niraj, I've got a couple of buy recommendations. One is from the pharma space. Cipla looks very strong on charts. In fact, the entire pharma pack is looking strong, but I've picked up Cipla. Breaking out from a consolidation pattern, looks good to test levels of 1320. So that is my target, 1320, with a stop loss at 1230 on the downside. The second stock is from FMCG, ITC. After a good consolidation, looks like stock is broken out from a falling wedge and a falling channel on very strong volumes. Yesterday volumes were pretty decent for ITC. So I'll go with a buy on ITC for a target of 483 with a stop loss at 455.
Okay, so those are some ideas from Aditya, and interestingly ITC featuring in that list. I'm inclined to ask both of you about the oil marketing companies because they were so up and about yesterday. Now Aditya, I believe earlier in the week you had recommended one of those as a call to. Are you taking money off the table, Aditya? First the technical view, Sunny, then I'll come to you fundamentally on this. But technically, Aditya, what do you do with an HP in particular, or BP or IOC too?
I would hold Niraj because I still believe the move is still left. Yes, it is maturing for sure. But talking of HPCL, I'll continue to hold my positions with a target of 450 to 460 on the upside. Maybe not trail my stop losses if I bought earlier closer to about 400 odd levels. If you're looking for a fresh entry, maybe wait for a decline closer to about 410 or 405 on Hindustan Petroleum, and then you can look for a fresh long positions with a stop loss at 390 and look for a target of 460. And I believe same holds true for BPCL and IOC as well. Very strong looking charts, and if somebody has to buy a fresh between the three, I will go for BPCL because I still believe there is a huge move left in BPCL. So at current levels, one can initiate fresh buying BPCL with a stop loss at 440 on the downside and look for a target of 500.
Sunny, just a quick thought. If there is indeed a price cut coming, could that be construed negatively, or would you still be sanguine on the prospects of the OMCs?
No, I think it will be marginally negative as far as oil marketing companies are concerned, because what I believe is that the rate cut, the price cut which the government will announce, partly will need to be absorbed by the oil marketing companies also. But having said that, all the oil marketing companies were enjoying extraordinary marketing margin over the period of last 3 to 4 months. So to that extent, there may be a marginal earning cut as far as FY24 and FY25 is concerned. But having said that, after a post knee-jerk reaction because of the valuation comfort, the street smart money may again try to enter in this sector post correction. So let us first hear from the government how much impact will be based on the excise duty cut and how much cut will be taken based on the marketing margin for oil marketing companies. Valuation comfort is surely there. At the same time, oil prices are benign, trading below $80 to the barrel. So that offer, at least that will ensure that a decent marketing margin will continue for all the oil marketing companies for next fiscal year. So maybe knee-jerk reaction today, and then probably once there is a clarity from the government, we may see again buying at the lower end.
That is the fundamental view coming in on an anticipated price cut and the impact that would have on OMCs. Also worth a mention is IOC had a pretty solid day in trade yesterday. The stock also did, apart from HPCL, BPCL, IOC as well was up about 5% in trade. City gas distributors also haven't been doing too badly in the last couple of weeks. We'll take a break. We'll come back. We're gearing up for pre-open trade. It's expected to be a subdued start to the end of the year, so stay tuned.
right, back with India Market Open right here on NDTV Profit. We are about to start trade in a minute and a half, so we'll focus on that and just mark the pre-open session and then come to a note that Motilal Oswal has gotten on GAIL. So I'll come to that in a moment, but just keep in mind that oil and gas is certainly in focus and something to watch out for. We've spoken about BP, HP, IOC. I think we'll talk about GAIL as well in detail in the session today as well. Keep in mind that ITC is a call that Aditya Arora has given as one of his top ideas, and we'll talk about some of the stocks fundamentally with our guest Sunny Agarwal as well. But the Asian picture looks okay, doesn't look all that bad, so that is one thing to keep in mind. We might start off on a flattish note, but we've done that now for a number of days and then picked up steam, more so at the large cap end, but the broader markets have also stayed favorable, so that's to be kept in mind as well. And 3, it's the last day of the year, but the first day of the new series. But because it's the last day of the year, watch out for some of the mid caps and small caps. Folklore has it that a clutch of these mid caps and small caps would move around quite a bit on alleged NAV management. I'm not saying that happens, but a lot of stocks see some very interesting moves at the mid cap and the small cap end of the market, so that's to be kept in mind as well. But the pre-open rate's about to kick in. Keep in mind that banking lent a good supporting hand over the last 3 sessions, and we watched out for in the session today as well. But here are the first rates. All over the place. We'll probably start off flattish, and maybe the Sensex is giving a more believable number, but let's wait and watch how this shapes up. Keep an eye out for IT, keep an eye out for banking. These are pockets that we certainly will be watching out for, but can't take your eyes off oil and gas either, or energy, simply because a lot of those stocks will be in focus. Now, OMCs have been focused for a number of reasons, but there is also something else in focus, and that is GAIL. So petroleum and natural gas regulatory board sets tariffs for GAIL KG pipeline. So now consumers will have lower gas prices. We have Mihika Barve to give us all those details. Mihika, tell us about this. Also tell us about brokerage from Motilal Oswal's view on GAIL.
Yes, so first I'll start off with the tariff. Now the board has set a 8.4 rupee per MMBTU tariff on the Krishna Godavari pipeline of GAIL, which is of the east coast of India, and this is significantly lower than the proposed 37.01 rupee per MMBTU tariff that GAIL proposed back in June 2023, and the tariff is basically set for the transportation of the natural gas through the pipeline. Now what it means lower gas prices for consumers, and it's beneficial for industries as well as households that do rely on natural gas. But from GAIL's perspective, their revenue per unit of gas which is transported to the pipeline would significantly decrease. But the low tariff could also incentivize the producer to, pass through more gas through the pipeline, and the lower price of gas offered could also give it a competitive edge over its peers, and it could attract more clientele and help its position in the gas transportation market. Coming to the brokerage note, Motilal Oswal has maintained a buy rating with a target price of 195 rupees, which offers a 24% upside to the current market price, and it's also mentioned that GAIL is one of its top picks for 2024. Now the brokerage does expect a 9% volume CAGR over FY23 to FY26, and the volume growth would be boosted from the increase in the domestic gas output by the Indian oil exploration companies like Reliance, Oil India and ONGC. It also expects the Indian gas consumption to be a little strong, as it would help be benefited from the 5 new LNG terminals that are coming on stream. And it also expects the transmission EBITDA of GAIL, the contribution to the total EBITDA to increase to 46% in FY26 versus 40% in FY23, and this gives more earnings visibility for the company. And lastly, it expects the petrochem segment of the company to be profitable at an EBIT level, and the new Usar plant would also add up to 9% of standalone EBITDA for the company itself.
Right, thanks for that. That's, of course, GAIL. The stock was a big mover in trade yesterday and might continue to see some sort of buying emerging today as well. Remember, the stock will be in focus on back of the upgrade to which came in from Motilal. So, Aditya, do you track GAIL? While we talked about the other oil and gas names, any trading call on GAIL? There's been an upgrade. There's been some change, some announcements on the KG. D6 KG is based in as well. So anything you'd be doing on GAIL, would you buy at these levels?
I would shy away from buying the stock. That's a very strong looking chart, and then yesterday's move suggests that the move can continue today as well. With a good support at 156, I'm looking for a target of 162, 162 to 164 on the upside. So it's not a bad looking chart, I mean, and I would be buying the stock. After it closes, it opens flat, I would go ahead and buy the stock.
It opens flat, you'd buy the stock, but it looks like it could be a gap up this morning. Sunny, you talked to us about OMCs, and I want to understand from you, what are you doing with ONGC and oil, and also GAIL, because of the recent news flow that we're tracking. So just give me a sense of how would you approach the other oil and gas stocks? Would you add them to your portfolio if you don't already have them?
Yeah, so definitely, again, ONGC and oil are play on crude oil prices, on global crude oil prices. And what I feel is that currently the ONGC and Oil India are factoring in the earning growth as based on the output as well as the current crude oil prices. So I won't like to bet my fresh money on ONGC or Oil India for that matter. In fact, I would like to ride the oil and gas sector through the pipe segment. So if you see and on a pan-India basis, the transmission network which the GAIL and like GSPL are putting, what I believe is that pipe companies such as Venus, APL, Apollo, JTL Industry, MAN, so all these extra pipe companies are one of the key beneficiary of the expansion in pipeline network on a pan-India basis. So basically a dual benefit which all these companies are deriving. One is on expansion on gas transmission line, and at the same time water transmission or water transport pipeline, which is getting a boost from the various government flagship schemes. So I would like to ride this sector through a pipe segment, and in that there are companies like APL, Apollo, Venus, JTL Industries, Ratnamani. Again, it's a play on oil and gas capex story. So better to play on a sector where we see a very strong tailwind as far as earning growth are concerned.
Aditya, a couple of the big movers that we saw in trade yesterday was Hudco, Hindustan Copper, Nalco, HPCL, of course, we've talked about. BHEL from the mid-cap space. Is there a trade on any of these names? Would you look at initiating fresh buy calls in opening today?
No, unfortunately not. Most of them have been witnessing a good, decent rally, and if I take a look at a higher time frame charts, most of them are trading at extreme overbought levels. So I'll try and avoid getting into these stocks at current levels. Maybe on a decline, if I get one today or maybe next week, I would look to buy these stocks. Today, I will completely avoid getting in opening trade.
And anything in the metals universe that you would go long on, apart from the two names I mentioned?
Yes, Tata Steel is something which is looking very strong on charts. In fact, a couple of days back also I mentioned Tata Steel. It's been a slow mover, and I believe now it's ready to join the metal party as well. So at current levels, one can actually look at going fresh long on Tata Steel, maybe look for a target of 150 with a stop loss at 135, 136. Looks like a very good bet in the metal pack. So Tata Steel is something that I'll be eyeing on in today's trading session.
Sunny, extending that conversation on the oil and gas space, I didn't ask you your call on Reliance Industries.
Again, what I feel is for Reliance, the play is on demerger of the retail business, which I feel is due maybe 12 to 18 months down the line. And as we all know, gradually the company is trying to shift the profitability metric from the oil business to non-oil business. And as the contribution from the telecom business or the retail business increases, the contribution from the oil segment will reduce. And at a current juncture, what I feel is that with a good momentum in the market, we may very soon hear an IPO of the Reliance Retail demerger and then post-listing of the retail arm of the Reliance. And based on that story, I would like to ride the Reliance with a price target of 2,900 to 3,000 rupees over the period of next 12 to 18 months. And at the same time, one more important trigger for Reliance is the capex of telecom. So what we believe is that the capex in the telecom sector is about to get over for the Reliance, and we may see going forward increase in the cash flow, and that will lead to the reduction in debt as far as Reliance Telecom business is concerned. So definitely an add to a long-term portfolio with a price target of 2,900 to 3,000 over the period of next 12 months.
Okay. Well, the pre-open rates have settled, and the Nifty may start off about 0.2% lower. The Bank Nifty may start off about 1/3% or 1/4% lower. So that's to be kept in mind. A few stocks that might be interesting. So CESE 2 days on a trot has had a good move and likely to start off positively yet again. So that's to be watched out for. And we were talking about stocks which might start off lower. I think Infosys might have an iffy start because it looks like in the pre-open session that Infy will start off about 1.5% lower. Now IT's had a good run thus far, just starting to cool off a little bit. Be mindful of that. Sunny, in the morning we were talking about some of these renewable energy companies and companies in that space. So not just Tani Green, which has signed a PPA recently, but Inox Wind, which got a large order. Suzlon, which yesterday got some order. Their supplier, or rather their transporter, Sangvi Movers, which does a lot of these wind turbine transportation in the country as well. Market leader apparently, even though small company. This whole ecosystem, do you like anything out there, and why so?
So again, Niraj, we all know that the renewable energy as a sector is getting a big push from the government. And rather than wind, what I feel is that in addition to wind, solar is one of the segment where we are seeing a good traction in terms of capacity addition. So what I feel is that if somebody want to create a basket on, if somebody want to ride a renewable energy as a sector, one can start from the financing companies. So companies like REC, PFC should be definitely part of your long-term portfolio. Definitely the stock has run up big time. In fact, REC, I believe, is one of the top performer as far as NSE 500 universe is concerned in the calendar year 23. So one can start from the financing companies like REC, PFC. IRDA has run up a bit lot, not comfortable on valuation front. Then moving on to the cap good side, one can ride this story through Inox Green, which is an kind of O&M company, operating and maintenance company. So all the wind turbines which are installed by the Inox Wind are being maintained and operated by Inox Green. So that's a pretty high EBITDA margin business. Moving on to the solar side, what I believe is that companies like KPI Green, or for that matter, Avari Renewables, or the companies which large cap companies like Adani Green, which will very soon start a gigafactory as far as solar modules is concerned, that can be on radar from a long term perspective. But having said that, again a word of caution: all these stocks have run up a bit significantly over the last 9 to 12 months. So buy on deep, gradual accumulation should be the strategy in the entire renewable energy space.
One sector that did quite well yesterday, and we slipped asking you about this some time ago, but FMCG, so Emami, Colgate Palmolive, Tata Consumer, Dabur, Nestle, Marico, HUL have all gone home with gains of 2 to 5% each. Any trades there on the long side? Would you tactically buy them, maybe for the Jan series?
That's for me?
Yes.
Oh, yes, definitely. So ITC will be the top bet if I have to pick one from the FMCG space. Apart from that, Marico looks very interesting to me. I believe Marico has, again, underperformed, and yesterday's move definitely suggests that the underperformance might diminish soon. And you can see levels of maybe 595 to about 600 as well. So at current levels, look very interesting. Marico with a good, strong support closer to about 520. So this reward is definitely favoring going long on Marico, but the top bet will be ITC followed by Marico.
Yep, ITC the top call there from Aditya, so watch out for that one. Now 2.5 minutes left. Sunny, we don't not in great detail, but if you can give us one fundamental idea for today, if somebody can log in and hold it for the whole of 2024, something that you certainly believe in, your one top call.
So I would like to go ahead with Maruti Suzuki, one of the big underperformer as far as auto sector is concerned during the last one and 2 months. And the reason being that the shift in the portfolio toward the SUV, which will lead to the margin expansion in margin, robust order book trading at an attractive valuation of 25 times price to earning multiple FY25, and can be added with a price target of 12,000 over the period of next 12 months.
Right. Rupees opened as well. Flat start on the dollar-rupee pair. So we closed at 83.15 yesterday. 83.17 is what we've opened in early trade this morning. Aditya, anything on pharma? I don't know whether we've asked you about pharma, but Lupin, Dr. Reddy, Glaxo, Ipca Labs, DV's Lab, again, had a good run yesterday.
So definitely this space also looks very interesting, no doubt. And I have a top call from pharma, which is Cipla. Apart from that, the couple of stocks which also look interesting, Dr. Reddy's and Divi's Lab, both of them are very interesting, and I believe can see further upside, at least 4 to 5% in both of them. Dr. Reddy's, after that sharp correction, one day it has recouped all its losses and now looks like it's headed to levels of 6,000 on the upside. And same holds true for Divi's Lab. It's broken out from an inverted head and shoulders pattern and looks very strong on the charts. I believe the stock can test levels of 4,100 to about 4,150 on the upside. So all three stocks look very interesting. Cipla, Divi's Lab, and Dr. Reddy's, so can be looked at.
Okay, and sorry, Samina, I'm guessing you were asking for this one top call, but watch out for ITC as well in particular as being that one key name. Remember, FMCG seems to be starting off well in the session today as well, so that's to be kept in mind. 56 seconds left for the markets to kickstart trade. Maybe I'll slip in one more trading question to Aditya. Aditya, we've been talking about power companies and how well they have done in the recent past. 3 days on a trot now. We've seen Calcutta Electric or CESC do well. It's starting off well again today. Is there more in store in Calcutta Electric or CESC?
Niraj, it's a little matured, I would say, the move now. If you've not bought yet, I believe you've missed the bus because on the upside, move seems capped closer to about 140, 145. On the downside, I believe stock can again come down to 120 levels. I would look at Tata Power instead of CESC at current levels if I have to pick one from the power space because I still believe a lot of up move is still left there. So 360 could be my target on Tata Power on the upside with the stop loss at 320 on the downside.
Okay, so between Tata Power and CESC, or rather, instead of CESC, Aditya prefers Tata Power. Watch out for that one today. Watch out for ITC. Watch out for Maruti, Sunny Agarwal's top idea. And now watch out for markets and how they are starting off. Well, for a change, we have the market starting off in the red, as the pre-open suggested, but quite unlike what the last few days have been. So the first day of the new series, about 0.25% lower for the Sensex and the Nifty. The Bank Nifty, more importantly, 1/3% lower. And remember, Infosys might drag Nifty IT lower as well, so that's to be kept in mind. Flat for the mid caps. I would reckon small caps too would be devoid of too much of activity. But let's pull up the small cap index and see what that is doing, and then pull up the heat map and see what's happening there. Yeah, 0.2% for the small cap index. Nothing to write home about. The heat map, a lot of red, very little green. Tata Motors, also the top gainer, less than 1% higher in trade, so hardly any winners today. But I would reckon not too many losers either, because the top loser is BPCL, and I wonder if there is this disappointment around the price cut which is weighing in on these stocks. Samina will mark HP, IOC as well, I'm sure, but BPCL certainly down 3%. Apollo Hospitals down about 1%, NTPC down about 1%, Infosys not down 1.5%, but still down about 1%. So the takeaway, quite frankly, is that FMCG is doing well, second day on a trot. Tata Consumer, Nestle, ITC, these are the names which are in the green. So that pocket is looking very strong, and I'm sure there are names at the broader end of the spectrum like Colgate, etc., which might be active. And on the losing side, it is OMCs which are looking wobbly. Samina, what are you spotting?
Big cut, Niraj. As expected, your OMCs are selling off very sharply, but I'll take you through that in a minute. But just before that, fundraising plans again. I mean, that's been the season, or rather it's been the season of fundraising. So PNB is one counter that you want to watch out for in trade today. That's the stock. It's trading flat, so no big reaction coming on the news point, but let's not forget that the market today is trading subdued. PNB still trading the slight positive bias. You've also got India Shelter Finance. I want to bring this one up because the listing wasn't too great. The company has posted earnings that are better than street expectations, and on back of that, you are seeing over 1.5% gain coming in on India Shelter Finance. Swan Energy, they've approved fundraising plans. So on back of that, you are again seeing a marginal gain that's sticking in. Take a look at your IOC, BPCL and HPCL. Niraj did indicate how some of those counters would be reacting. There is an anticipated price cut coming in. On back of that, all your OMCs are under tremendous pressure, 2.5% to 3%. They're off the day's low point because when I did check last, HPCL had opened the gap down of 4.5%. It's off the day's weakest point, but still trading deeply in negative territory. 3% 2.5% to 3% off on all your OMCs right now. GAIL, if I can pull that one up, the stock had a pretty solid run yesterday. This morning too, it's up about 1.5%. Motilal Oswal has upgraded the price target of GAIL. They've also upgraded the counter from a hold to a buy with a 9% increase in their price target. That is leading the counter high with a 1% gain there. Azad Engineering, worth a mention, the stock listed on the exchanges yesterday. It saw a gap up of about 35-36%. Finally went home with gains of 28%. But what we did see was around 700 rupees and 720 rupees a piece. Abu Dhabi Investment Fund has picked up a marginal stake. I'm mentioning this because this came in at the day's high point on Azad Engineering yesterday. The stock back up and running 4.5% gains on a day when the markets are generally looking quiet. So it's an interesting morning, lots of movers and shakers. The list of gainers is maybe shorter than the list of losers, but OMC is leading the way down in today's day of trade. Niraj, I'm not surprised. It's a quiet day, and it should be, I'm guessing.
Well, Samina has been rooting for it. So in some sense,
I want to go off on holiday.
Samina has been rooting for it, so in some sense, it's maybe warranted, if you will. But yeah, I mean, now 0.5% lower, so certainly a bit of a drag in the markets for sure. Just marking a couple of other stocks, KPIL has done well for itself. Kalpataru Projects International up 8% now, so really strong show by that one. We've seen Ratnamani Metals also do well, and I think we'll get you an idea of why that could be happening in moments from now. So watch out for that stock as well. Ratnamani is up in trade. Tata Coffee is up about 3% in trade, and Zydus Wellness, wherein SBI Mutual Fund and the Zydus Family Trust bought some stakes sold out by, I think, a foreign entity. That stock too is doing well. Aarti Industries continues to do well, up about a couple of percentage points. But on a quiet day, don't see too many trends, but for the fact that some of these chemical names still seem to be doing well. It's Aarti, there is Alkala Mines, etc. So 2 or 3 of these are doing well. Opening thoughts, Aditya, 5 minutes into trade, anything that stands out?
Really, it's more of a flattish trade. I don't see too much of a cool off. Maybe we'll consolidate some more at current levels. And talking of OMCs, I believe it's a good opportunity to actually latch on to most of these OMCs after a recent correction in trade today. They are recovering from the low point of the day. I believe there's opportunity. You can maybe place a stop loss at today's low, and you can look to go long on these stocks. They could recover most of their losses with opening today.
Wow, that's some confidence on Aditya's part on the charts. Keep the low of today as the stop and go long on the oil marketing companies. So that's the call. BP, HP, IOC amongst the top losers today. Privy Specialty Chemicals, by the way, is down about 4%. Aptus Home is down about 1.5% as well. Actually, it's mixed on the chemical side, I must say. Privy, Fine Organics, etc. are looking slightly wobbly. The last few days, Sunny, and just before we get in a brokerage note, there is some views coming in on the API stocks as well. We're talking about chemicals, but the API companies, Divi's, Laurus, etc. have had a good run. Do you like them, or is it a dead cat bounce, if you will?
Again, what I feel is that pharma as a sector, anyway, it is an under-owned sector, and the way second quarter commentary was coming from the company, I think the worst is over as far as price erosion for all these pharma companies is concerned. Now the issue is whether these companies will start reporting an healthy earning growth, double-digit earning growth. So what I feel, yes, maybe FY25 is the year where we may see a decent earning growth from all these API and CDMO companies. So yes, kind of under-owned sector trading at a decent valuation. So one can definitely look at this sector from, but again, the horizon here should be a medium to long term and not a short term if somebody want to ride this sector for trading or investment bet.
Okay. Gentlemen, stay on because I just want your view before we thank you on this particular space as well. It's highlighted by DAM Capital. They are bullish on steel pipes and tubes as infra, oil and gas, transmission, water supply all of these will drive the steel pipe demand. DAM Capital initiated coverage on Venus Pipes and Ratnamani Metals and Tubes with a buy rating. Varsha Chandani, my colleague, is joining us now with more details on this note. Varsha, good morning.
Good morning, Niraj. So as you rightly said, so DAM Capital has initiated coverage on these stocks. Now let's see what's the rationale behind why this initiation. So one is oil and gas growth tailwinds to drive demand for line pipes over the medium term. So almost 15k kilometer pipes have been added currently. Also, government's aggressive plan for this water supply should also drive the consumption for the steel pipes, and the government capex has been increased recently, which should eventually pull up the private sector capex. So let's see the investment rationale for Venus Pipes, which is building a niche for itself in steel pipes, which is a low volume but a high margin product. And if you see, the market share of Venus has been around 4 to 5%. While if you see the Ratnami Metals market share has been almost 8 to 9%. Now, DAM expects this gap to steadily close up in medium term. Also, capacity augmentation to drive growth for this company and improving value mix and their backward integration plan should aid margins. Then next we have Ratnami Metals and Tubes, where capacity is on hand to drive growth and cement leadership position. Also, the diverse product mix that this company has will reduce commodity price volatility, which will increase its profitability. Also, improvement in capacity utilization, then change in product mix will drive margins for this company.
Okay, thanks for that, Varsha. So, interesting note and interesting comments there. Fundamentally, Sunny, would you agree with this assessment? The stocks are very active, of course, but do you agree with the assessment? And do you like either of these two names or any other steel tube name?
Yeah, Niraj. So recently we have been meeting all these companies, and what we found is that all the companies are very gung-ho on the capex story as far as oil and gas, infrastructure or water segment is concerned. And everyone is on capacity expansion spree. So case in point, JTL industry currently at 0.3 million ton. The capacity will expand to almost 1 million ton in a span of 2 years. And the recently company has announced a mega capex of 1300 crore post FY26, which will take capacity from 1 million ton to again 2 million ton. So a jump from directly 0.3 million ton to 2 million ton. Similarly, APL Apollo, we are JTL Industries. It's a JTL industry, not GTL. And similarly on APL Apollo, we have seen that their Raipur plant going on stream. Its entire plant is dedicated to value-added product. So their EBITDA per ton, which is right now in the band of 5,000 rupees per ton, that will again expand to nearly 6,500 to 7,000 rupees per ton. So basically, story of capacity expansion, at the same time shifting product mix towards the higher value-added product, and supported by a strong demand from infrastructure, oil and gas and water segment. So I feel a few other names which again I think DAM has very well covered. Venus also. One more name which I would like to add to this list is Good Luck Steel, which I feel again they are 50% of the business is still coming from the pipe segment. And again, it's the indirect play on infrastructure growth story of India. So Good Luck can also be on radar from medium to long term.
Right. Sunny, I'll come to you in a minute on the Tata Consumer and Tata Coffee merger that is on the cards and has got approval for. But Aditya, do you have a technical call on the Tata Group companies? They all seem to be trading quite positively this morning.
Oh, most of them have done well, I get this week as well. So look at Tata Consumer, Tata Communication, Tata Steel, Tata Motors, all of them look very strong, definitely. If I have to pick one bet from the Tata Group companies, Tata Consumer will be the top bet, followed by Tata Power, which I mentioned earlier in the show. So I believe these two stocks definitely stand out. And Tata Motors, definitely it's more of a buy and hold in your portfolio kind of a stock. So all three stocks stand out, Samina, and I believe one should buy and keep them in the portfolio at least for 3 to 4 months, and you will see decent gains coming in all these stocks.
Right. Sunny, what about you? Tata Coffee will merge with Tata Consumer TCPL Beverages on the 1st of January. This is what was reported to the exchanges yesterday evening, and the stocks are reacting very positively. What does this mean for existing shareholders of Tata Coffee and Tata Consumer?
I think anyway the merger issue was announced a few months back. So I think in terms of
Sunny, I think we've lost your audio. We will come back to you in a minute once we, of course, manage to re-pick up that audio. Well, apart from the Tata Group names, the few other names that are trading well is Kalpataru Projects. Aditya, do you track this one? 8% rally in trade right now.
Unfortunately, I don't track the stock that much, but I can just take a quick look at the chart. Yes, so 725 is where the immediate resistances are for this stock. If that is taken out, then I could look to go fresh long on the stock, because that's a triple top level. So till the time that level is taken out decisively, I'll not go long after this gap up open and trade today.
So,
Samina, there is an interesting arbitrage position that somebody highlighted to me yesterday on Inox Wind and Inox Wind Energy.
Okay.
Now, 158 shares of Inox Wind or 10 shares of Inox Wind Energy will get you 158 shares of Inox Wind as per the swap. Now, the merger got a yes from the exchanges yesterday. If we just do the math based on current prices, the value of Inox Wind of 10 shares versus the value of 158 shares of value of 10 shares of Inox Wind Energy,
which is about 470 rupees currently.
No, which is about 5,100. Inox Wind Energy is 5,100 something.
Yeah, so that's okay.
So 10 shares versus 158 shares of Inox Wind, which is the 470 rupees. The difference is 50%.
You're right, 44. Yeah,
it is 50%
versus 5150.
Yes, I tried to speak to a few market participants who track this. None of them have an idea of why this could be happening. Maybe it is in T2T, Inox Wind Energy, and that could be reason, but there's a substantial arbitrage difference between these two, and both the stocks are red hot. This year they've been rank outperformers, but just that there's a 50% arbitrage in the making.
So are you saying an obvious trade would be that prices will eventually merge over the course?
Because eventually they'll get, even if they don't converge, you getting 158 shares of Inox Wind for 10 shares of Inox Wind Energy. The only question is, will Inox Wind prices fall by then
to balance that arbitrage?
But that doesn't happen, because the arbitrage was
up or the other one.
Yeah, but the arbitrage was 22% and it's now 50%. So that's the point.
It's increased.
In very, very likely that if the business models are doing well, then Inox Wind Energy could do better. Yeah. But it's a brilliant arbitrage out there.
But yes, I think that's one that you want to keep track of in terms of an arbitrage trade that could be happening on Inox Wind and Inox Wind Energy. Not sure whether that is the reason why we are seeing this in the Tata Group companies. I don't know what the swap ratio there is, but we'll wait it out and see if there is an arbitrage opportunity there too. Sunny, you want to come in on these Tata Group names? What does this mean for the current shareholders of Tata Consumer and Tata Coffee?
Yeah, so there was a technical glitch. Sorry for that. What I was telling that Tata Group has consolidated all its food business under Tata Consumer, and that is leading to excitement that going forward that Tata Consumer can be one of the fastest growing consumer company. And again, that is driven by the two-pronged strategy. One is normal organic growth, wherein the growth from beverages as well as food segment, which is pulses, is doing phenomenally well. On the other hand, Tata Consumer has been on acquisition spree, so we are seeing a smaller brand getting acquired by Tata Consumer. That is again giving a leg up in terms of the earning growth as far as Tata Consumer is concerned. So what I feel is that again Tata Consumer is well placed to grow at 15 to 18% based on both organic as well as inorganic acquisition. And recently, the group has been on prowl to acquire two big brands. One is Bisleri on the water side, and one is Ching's Secret, which is on basically a Chinese food product side. So what I feel that if one of the acquisition materializes, definitely it will lead to the further upgrade of earning as far as Tata Consumer is concerned. So it's a play on basically food product basket for Tata Group, and will be again one of our top pick as far as Tata Group is concerned.
That sounds exciting. That's Tata Consumers. That's the buy call coming in from Sunny. Tactically looking like a good fundamental call. Well, Sunny and Aditya, thank you for joining us. It was a pleasure talking to you both. Season's greetings and Happy New Year in advance, and have a good weekend. We'll see you on the other side next year. In the meantime, the markets are trading exactly the way we started off, really. So nothing much has changed on the index. A little bit of consolidation, a little bit of downward bias, but nothing to worry about. We're still respecting the 21,700 mark. Bank Nifty as well, not doing too badly in trade. The Sensex also off about 160 points. The breadth of the market is slightly weak. The broader markets, though, largely moving in line with the benchmark as well. A couple of stocks that are catching our attention on the Nifty 50. BPCL is the top loser, down 2.5% on an anticipated fuel price cut. Kotak Mahindra Bank is off about 1%. Apollo Hospital, ONGC, Reliance Industries, SBI, Infosys. So banking, oil and gas, some of your pharmaceutical names, Tata Steel, metal counters are all trading with a negative bias. But again, the cuts are not very large, so nothing really to be too concerned about at this stage. On the buy side, on back of the merger details being reported to the exchanges by the Tata Group companies, Tata Consumer is up 3%, Tata Motors is up 2%. Auto is not looking too bad. So Aisha, Tata Motors and Maruti are all trading with a slight positive bias. ITC, Asian Paints, Bajaj Finserv are some of the other few gainers. On the broader markets, Kalpataru Projects is leading the gains at the day's high point, 8.5% higher. Godrej Industries is also up about 6%. So FMCG continues to look good in trade, extending the gap rally from yesterday. Godrej is up 6%, 6.5% now as we speak on Godrej Industries. So all in all, it's an okay market. No concerns yet. We'll take a quick break. We'll come back on the